Getting a non-renewal letter from your home insurer is scary, but it is not the same as being uninsurable, and you have more options than they let on. Across the country, carriers are pulling back from wildfire, hurricane, and flood-heavy zip codes, and plenty of homeowners are getting dropped who never filed a single claim. So here's the whole playbook. The real legal difference between a mid-term cancellation and an end-of-term non-renewal. The advance written notice you're owed either way. Exactly what to do the day that letter lands in your mailbox. The state fair plan as your backstop when nobody else will write you a policy, which non-renewals are actually improper enough to fight, and when it's time to call in your state's insurance regulator. Let's name what's actually going on, because it changes how you should feel about that letter. One major carrier alone non-renewed something like 30,000 California homes and rental properties in a single wave a couple of years back. And it wasn't because those homeowners did anything wrong. The company was retreating from wildfire exposure company-wide. That pattern has repeated with other big-name insurers pulling back from entire states or zip codes. So before you assume you're being personally punished, understand the more common explanation. You may have simply been standing in the zip code the algorithm flagged. That distinction matters for everything that follows, because a market-wide pullback and a targeted, improper drop get fought completely differently. This table is the single most important thing to get straight before you do anything else, because the two words get used interchangeably, and they're legally very different animals. A mid-term cancellation is the insurer cutting you off before your policy's natural end date, and states clamp down hard on that. Once you've had a policy a couple of months, they generally need a real reason like a missed payment or fraud, not a vibe. A non-renewal is different. Your term is simply ending, and the insurer is choosing not to offer you another one. That's allowed for a much wider range of business reasons. Look at that bottom row for a second. Because it's the practical takeaway, cancellation gives you almost no room to argue, but non-renewal still comes with rules the insurer has to follow, and that's where your fight actually lives. California is a clean example of how far this right actually goes, so let's use it as the template. Insurers there generally have to mail that notice at least 75 days before your policy would expire, and it can't just say non-renewed. It has to point to the actual reason, plus give you a phone number to push back on. Here's the part almost nobody knows. If the insurer blows that deadline, California doesn't just fine them later. Your existing policy, unchanged, keeps running for the full notice period starting from whenever they finally do send it. So the very first thing to check when that letter arrives isn't the reason, it's the postmark. Because a late notice can hand you extra weeks of coverage you didn't know you still had. This is the protection almost nobody knows exists until they need it. California's version kicks in automatically once the governor declares a wildfire emergency. For a full year afterward, insurers can't cancel or refuse to renew residential policies in the fire perimeter or the zip codes right next to it, and that includes homes that took zero damage. Not just the ones that burned. The Department of Insurance actually publishes a map of exactly which zip codes qualify. But don't get too comfortable. 1 year means exactly that. The clock is running the moment the declaration happens, and if you spend that year assuming you're safe forever, you'll get a real non-renewal notice the day after it expires. Use the breathing room to actually shop, not to relax. Here's a move that costs you nothing and can change every quote you get afterward. Every time you file a claim, or sometimes even just call to ask a coverage question, it can land in a shared industry database called Clue, and every insurer you apply to pulls that file before they quote you. Because it functions like a credit report for your house, federal law gives you the same basic rights. You can request your own copy at no charge, and if something on it is wrong, a claim that was actually a simple inquiry, or one that got miscoded, you have the legal right to dispute it and have it corrected. Do this before you start shopping, not after, because a bad entry sitting uncorrected can quietly follow you from carrier to carrier. Treat this like a checklist you run in order, because skipping ahead costs people real money. Step 1 is slower than it sounds. Actually read the letter twice, because not renewed and canceled are different words with different rights attached, and the effective date is the deadline everything else revolves around. Step 2. Put your request for the specific reason in writing and pull that clue report we just talked about, so you know exactly what a new insurer is going to see. Step 3 is where people waste the most time. Don't call insurer after insurer yourself. An independent agent can run your address against a dozen carriers in one pass, including some that don't sell direct to the public at all. Step 4 is your safety net, not your first stop. If literally nobody in the private market will write you, the state's fair plan exists, so you're never actually uninsurable. And step 5 is your alarm bell. If that notice skipped a step the law requires, or the reason doesn't add up, that's exactly when you stop shopping for a minute and file a complaint instead. Don't picture the fair plan as a downgrade you should be embarrassed about. Picture it as the reason uninsurable basically doesn't exist in America. It exists precisely so that when every private company says no, there's still a policy you can buy. That said, go in with clear eyes. You'll typically need to show you were actually turned down by the regular market first, and the coverage itself is often narrower than what you had. California's version, for instance, describes itself in its own materials as a temporary safety net built around fire risk, with other perils sometimes needing a separate policy stacked on top. The fair plan's own stated goal is getting you off of it and back into a normal policy as soon as the market allows. So use it to keep your home insured while you shop, not as the plan you stop thinking about. Run your situation down this table honestly before you spend a weekend fighting a lawful decision. The left column is where non-renewals actually get overturned. The notice skipped a required step. The reason reeks of discrimination or looks like payback for a complaint you filed, or you got dropped over a single storm claim in a state that specifically bars insurers from doing exactly that. Texas, for example, has that weather claim protection written into its own consumer rules. The right column is where most appeals quietly die, a policy that genuinely lapsed for non-payment, or a big statewide pullback where an entire insurer left the market and every policyholder like you got the same letter, not just you. That last one stings, but it isn't personal and it isn't illegal. It's exactly what step 3 on our flowchart, shopping with an independent agent, is built to solve. This is the lever most people never pull, and it genuinely gets attention. Illinois is a useful example of how specific this can get. Homeowners there can request a formal hearing, but the request has to go in writing to the department at least 20 days before the policy actually expires, so this is not a get around to it eventually task. More generally, every state's department reviews complaints about unjustified cancellations and non-renewals at no cost to you, forwards your complaint straight to the company, and checks whether they followed their own state's rules. And here's a protection worth knowing before you're tempted to stay quiet. Insurers are barred from retaliating against you. No punitive rate hike, no blacklist, just for having filed one. Most homeowners who end up with an actual gap in coverage didn't lose a fight. They ran out the clock. The number one mistake is treating that 75 or 60-day window as slack instead of a countdown. Agents need real time to shop your address properly, and waiting until week 10 to start means settling for whatever's left. The second is skipping the reason entirely and just hunting for any new policy. If it was your roof's age or an old claim, and you don't fix or explain that, you're liable to get the same letter again in a year. And the third is the one that actually costs money. Letting the old policy lapse for even a day rather than bridging the gap with a fair plan policy. Because an uninsured gap on your record makes every future underwriter nervous, even after you're insured again. There's a real line where this stops being a research project and needs a professional. If your state complaint goes nowhere, or the company simply stonewalls your written requests, an attorney or a broker who specializes in high-risk placements can push in ways you can't. Take it seriously, too, if the pattern smells like discrimination. The Federal Fair Housing Act has been enforced against insurers for redlining based on a neighborhood's racial makeup, and that's a civil rights claim, not a customer service complaint, so it needs a lawyer immediately. And don't sleep on the mortgage angle. If your lender's deadline is close enough that they're talking about force-placed insurance, coverage they pick, at a price they set, that can run several times what you were paying, that's your signal to stop optimizing for the best deal and just get anything bound today, then fix the price later. So here's what to actually walk out the door with. First, know which letter you're holding. A midterm cancellation is narrow and hard for an insurer to justify. A non-renewal is broader but still owes you real advance notice in writing. Second, don't skip the homework before you shop. Get the specific reason, pull your own clue report, and let an independent agent run your address against carriers you'd never find on your own. Third, respect the fair plan for what it is, a genuine backstop that keeps uninsurable from being a real outcome, not a place to get comfortable long-term. And last, know your exit ramp. No notice, a discriminatory or retaliatory pattern, or a single barred weather claim isn't just unlucky. It's the kind of thing a free DOI complaint exists to fix. Move early, keep it in writing, and you'll come out the other side insured. This video is general education, not legal, financial, or insurance advice. And the rights covered here, notice periods, disaster moratoria, fair plan eligibility, and Department of Insurance complaint processes, vary by your state and by the specific terms of your own policy. It was researched and produced with AI assistance, including script research, voice, and on-screen graphics, and reviewed by a human against the cited sources before publishing. Before you act, read your notice and your policy in full. Check your state's insurance code and your state Department of Insurance's process. And if a lender deadline, discrimination, or a large loss is on the table, talk to a licensed attorney or insurance professional in your state. Subscribe. Homeowner Rights Explained breaks down one homeowner right every video.